Hello, I hope you've all had a good lunch and are ready for another forward thinking topic. We often hear about the more familiar types of property investment, but how much do you know about tokenization in real estate? Let me know in the live chat so I can see who is already familiar with this term. This next session will cover the technology behind real estate tokenization and how tokenization will change the way we invest in real estate. For this webinar, I'd like to invite Oliver Siah, co-founder and CEO of Fraxter, to share more on this topic. With more than 10 years of experience in the real estate industry, Oliver manages investments in commercial and industrial properties and residential real estate development in Singapore. Oliver is the regional chair of the Foundation of International Blockchain Real Estate Expertise in Singapore and a member of the Singapore Institute of Directors and the Institute of Engineers, Singapore.
Hi everyone, I'm Oliver Siah, co-founder of Fraxter. Today I'd like to talk to you about how tokenization is shaking up property investments. Just some disclaimers before I begin. What I will be presenting is for education only. Fraxter is currently not licensed by MAS, and products that we carry are not suitable for retail investors. So let's begin.
If you've always dreamed of taking part in multiple real estate investment and development opportunities, but lack the access or capital to do it, you're going to love Fraxter. Based in Singapore, Fraxter is an online investment platform that enables you to invest in multiple real estate globally, even with a small amount of capital. For accredited investors, it's easier than ever to diversify your portfolio and make fractional investments worldwide, tailored to your risk profile. Using Ethereum blockchain technology, Fraxter's platform offers the most convenient way to invest, manage, and track your investments securely, all from the comfort of your own home. With over 100 years of combined experience in real estate, our team carefully selects major opportunities in global markets that would otherwise be inaccessible to the average investor. Welcome to Fraxter, your partner in global fractional real estate opportunities.
Hi, a little bit more about me. Before venturing into Fraxter, I was a Singapore Air Force officer and pilot. I was a military training award scholarship holder, and I graduated from the Australian Defence Force Academy. I have bachelor degrees in engineering as well as accountancy and finance. I also have an MBA from Imperial College and a real estate master's from NUS. My real estate journey started in my early 20s. I slowly built up experience in residential, obviously before the cooling measures, commercial, industrial, real estate investments. And more recently, together with my partners, we ventured into real estate development. I am currently the chairperson for the Foundation for International Blockchain and Real Estate Expertise, which is an international foundation focused on bridging blockchain and real estate. So Fraxter is a tokenization and investment platform for real estate. We are incorporated in 2017. We were exempted from MAS regulations in 2018. In 2019, we tokenized Singapore's first property. This is a detached house along Upper Thomson Road. We raised more than $30 million on the platform since then for UK, Canada, Australian, as well as other Singapore properties. We received in-principle approval from MAS for our Capital Market Services license in the middle of this year. We are expected to be fully licensed in Q1 next year. And just to let everyone know, we only serve accredited investors on our platform. To introduce the rest of my real estate team, we have Mr. Daniel Teo, can be seen standing beside me in the article here. He is a director of Tongeng Group, which is a reputable real estate developer in Singapore. Next to him in red is his daughter and also my co-founder, Ms. Rachel Teo. The gentleman in black is Mr. Edwin Lam, the General Manager of Hong Hao Group and Director of Fraxter Capital. This Edge article here relates to our recent acquisition of a 30,000 square feet site in the Gold Hill Estate. We had tokenized the investment and allowed other accredited investors to invest in this wonderful development project. So let me just dive into what I want to talk to you guys about today, which is what is real estate tokenization. So real estate tokenization is a process of breaking down large, chunky real estate investments into bite-sized amounts. As you can see here, each of these tokens, for this particular example, a building that is costs about $10 million. If I'm able to cut it up into 1,000 tokens, each token will have a value of about 10,000. So each of these tokens would represent, the share certificates as well as the venture notes that we use in private equity real estate today. Each token is created using smart contracts on the Ethereum network, and each transaction is recorded and updated on the blockchain. The tokens are registered to the user's unique blockchain address, which they will have full control of, and the smart contracts will determine the way in which these tokens can be transacted. So let me unpack all these jargon for you. So one by one. So what is blockchain? So every time, when we hear people talk about blockchain, we think of Bitcoin, Ethereum, we think of ICOs, and then more recently NFTs, right? But blockchain is actually the technology behind all these highly speculative products. And blockchain is used primarily because it is a trusted technology. It makes it almost impossible to change, hack, or even cheat the system. It is very important to differentiate, between the real estate tokens and the cryptocurrency tokens, which fluctuate wildly. The real estate tokens do not fluctuate wildly. They are dependent on the underlying real estate asset, just like how a share in a property or a debenture in a property would react. Blockchain is a distributed ledger technology. It forms a ledger of transactions which is duplicated and distributed across the network of computer systems linked to the blockchain. So let's visualize how this actually looks like. Suppose we have a transaction between the gentleman on the left, called Mr. Pink, and the gentleman on the right, Mr. Green. So they enter into a transaction, and this forms a record. And a record is part of the data that is being processed by the blockchain, for instance. So this record has to be validated by the network of computers and nodes on the blockchain network. So the blockchain network will therefore decide whether to accept and agree that a transaction took place, or it will reject it if it doesn't feel that the transaction is valid. So this record then forms a part of a block of data that will be stored on each of the nodes in the network. And this block of data will have its own unique hash, which is derived cryptographically using the data within the entire block, as well as the hash of the previous block of data, thereby linking the new data to the previous set of data. What this means is that each block of data moving forward will form a relationship with the previous block of data that was before, and so on and so forth, forming an entire chain of data blocks, as we can see in the illustration here. So what happens if someone tries to amend the previous transaction? Okay, so for example, the same Mr. Green, he tries to back out of the transaction with Mr. Pink by amending a transaction record. By amending a single data point in the entire block, the hash of the entire block and the blocks after that block will no longer match. This will then be rejected by all the nodes on the blockchain network, preventing the amended transaction from taking place. And for you to recalculate and rehash the entire block to amend certain transaction record, you need the consensus of all the nodes within a majority of the nodes within the blockchain network. So what is all this got to do with tokenization? Because if you have a digital currency like Bitcoin and Ethereum, and you're able to double spend it, which means you can do you can make one transfer, and then subsequently make another transfer using the same token. If that happens, obviously, blockchain, this token cannot be used as a store of value, especially when you talk about spending money, right? If you can Control-C, Control-V the token, which is copy and paste the token, and then you get a lot of tokens, then your tokens, they won't have much value on the network. Very similarly for security tokens, if you're able to duplicate tokens, you're able to do multiple transactions, that's going to be a problem. So how the blockchain prevents this double spending problem is using the consensus model, like where, just now when I mentioned majority of the nodes must agree on whether or not the transaction is valid, and then maybe after that they'll reject any other transaction if the user try to use copy the same token and try to use it again. So it's basically the blockchain saying, hey, we already know that you have spent this token, right? We already saw you do it, and then you no longer have that token to spend. So it rejects that particular transaction. The other thing about the blockchain technology, definitely is a smart contract. So I mean, you've heard people talking about smart contracts. What are smart contracts? It's very important to note that smart contracts are not legal contracts. Smart contracts are simply, programming code that is stored on the blockchain that can run when predetermined conditions are met. They are typically used to automate the execution of an agreement so that all participants can be immediately certain of the outcome without any intermediary being involved in the entire transaction. So what that means, usually when we talk about how to explain, when it comes to explaining blockchain, we first thing we think about is the vending machine. So in this case, we have a vending machine here. For example, this vending machine distributes cupcakes, right? And this particular machine, I mean, it will function according to a certain guided set of principles. For instance, to buy a cupcake, you must follow a certain process, right? You must go to the vending machine, you must make a selection. Then the machine goes back to check if the cupcake that you have selected is available. And then after that, maybe it prompts you for payment. And then what you do is that after you make payment, it will dispense the cupcake to you. All these, as you can see, written in an Ethereum code on the right-hand side, does just that. So by looking at the code, if you understand what the code means, it is exactly this entire process. Nobody will be able to come in to change the code. Nobody will be able to come in to amend the way, maybe if you choose strawberry cupcakes and it pops out chocolate cupcakes, for instance. So all these are coded, and for those in the know, when you look at the code, you're able to audit the code, and then you're able to make sure that this code does exactly what it sets out to do. So there is no intermediary in between you and the cupcake. In this analogy, the vending machine merely acts as a smart contract between you and the cupcake. So a very similar process occurs when, say, investors come in to buy a real estate security token. So let's imagine having some real estate tokens in an exchange environment. So this is an environment where people are making transactions directly with each other. And imagine each of these tokens are linked back, to the previous slide where I talk about, having 1,000 tokens of a $10 million building, for instance. So in essence, the transactions that are about to take place here will form sort of like a, like a stock exchange, but for real estate. Okay, so for this particular example, you have a party A and you have a party B. So the smart contracts, when we deploy it, will dictate how this real estate token can be transferred from party A to party B. So if we think back of what, we can think back of what SGX, for instance, is doing with traditional securities, right? SGX relies on intermediary, which is the central depository. So they are the owners of all these securities. And so what they do is when they take an order, they will verify that, oh, the guy selling, which is party A, has that required ownership of this security, and he has the required quantity that he's going to sell to party B. And then they will look over at party B side and say, oh, the buying party has the required amount of funds, deposited maybe with the broker to purchase the security. So once that condition is met, the central depository, being the intermediary, will then agree, that the transaction is valid, and then they will record it as such. So they will transfer securities from party A over to party B. This entire process, like most of you will know, if you buy REITs, if you buy stocks on the SGX, it takes at least 3 days to complete. So it's always T+3 for 3 days to complete the transaction. On the blockchain, using smart contracts, the transaction is almost instantaneous. So that is the difference, really the difference when you talk about tokenization. First, you remove the middleman. Second, you speed up the entire process. Third, you have code that you can audit, you can look at to make sure that what you agree to do with party A and party B actually will be carried out. So this is a very important analogy to take note of. Okay, so enough of all these technology mumbo jumbo. So let's talk about how we can make money from real estate. Obviously, I mean, everybody is interested in real estate investments. We buy our own direct personal property investments. We buy REITs. We buy into property developers, for instance, as well. So being Singaporeans, being Asian, we really love to buy real estate. But there are many problems, when we will experience, based on our experience when we buy real estate. It takes a really long time to transact. It really requires a lot of capital to invest in real estate. And even if you have the amount of capital, most of us can only maybe buy one or two real estate for that instance. And it's also very difficult to say buy overseas properties. Right, you have to know the rules and regulations there. You need to sign documents over in the other country as well. So there are many problems that we have in terms of investing in real estate. So how does real estate tokenization then benefit us? I think the most immediate benefit that most of us can see is that tokenization, we're able to break down large chunky real estate investments into really numerous number of tokens. This will then bring down the investment amount. So from tens of millions, you're only spending tens of thousands, for instance, and then you're able to invest in a particular building, in a particular development, in a particular project, for instance. So investors who also come in, they invest in bite-sized amounts, for instance, like maybe tens of thousands. This will allow them to more effectively diversify their portfolio. So for instance, if you have enough capital to say invest in one property in Singapore, right? If that property goes vacant, guess what? You can lose 100% of the income coming from that one particular property. But if you have multiple properties, right? If you use the same amount of capital and then you buy into tokenized properties, you can invest in probably 10 or even 100 property units or even a building. And so that would help you sort of diversify the risk in terms of a concentration risk on one property assets. And if you work with a fund manager, the minimum that fund managers require you to invest is about $500,000 to even $1 million. If not, they don't even bother talking to you. So with tokenization, you can transact on your own without really going to the fund manager, and then that would really help you democratize real estate, because now you're able to enter the fund at say 10,000-20,000 investment size compared to say $500,000 to $1 million. And the reason why a tokenized platform or real estate tokenization is able to do this is because the smart contracts, like what I mentioned earlier, is able to handle a lot of transaction volume. And because everything is handled at the smart contract layer, we don't really have the hassle of signing documents to buy property, to sell property, for instance. Everything is done literally with a click of the mouse. So this is what the benefits of digitizing and also tokenizing real estate investment is. So I mean, if you compare to what like I just now I mentioned, what the SGX transactions, they take T+3. But if you're able to really if you're able to tokenize real estate, and then you allow trading of the real estate tokens, that would give you instant liquidity. Instead of waiting T+3, you'll get instant liquidity, for instance. In terms of accessibility as well, because you are now able to access a lot more. Instead of investing in one property, you have enough capital to invest in a lot more real estate assets. So that gives you the accessibility to access a UK property, a Canadian property, an Australian property with the same amount of capital that you originally had. So that's accessibility. Now you must be thinking, oh, Oliver, this sounds like a REIT or like a listed real estate developer. The answer is yes, it is true. But there are many distinct differences that we have to consider, right? Because for REITs, you don't really invest in, say, real estate development projects. And we all know how local listed developers are, they are very stingy with their dividends. So how do you then, if you wanted to be a developer, how could you possibly come in to invest like a developer, for instance? And then also, if for REIT kind of structure, you don't really get to enjoy the capital upside when the REIT manager sells a property. Why? And the reason why is, they'll take the cash, they will pay down their loans, they will acquire additional assets. So that's a very different model. Like many of us who have done direct real estate investment, other than the rental yield that we get periodically, what we love about direct real estate investing is, the high the capital appreciation when we sell the asset. That is something that people entice people to directly invest in real estate. So for real estate tokenization, it is very similar to what happens in direct real estate investing. So let me just cover some examples. Say, for example, you thought of becoming a developer. All the developers in Singapore are making a lot of money. They are the majority of the richest people in Singapore. So wouldn't it be nice to be part of that action, right? But if you're an individual investor, how do you participate in a development project, for instance? If you invest in a listed developer in Singapore, you don't really get the development upside, right? You don't get very high dividend yields. You don't really get very high capital appreciation on your share price. And that's the way the capital markets work, say on an exchange, for instance. But for real estate tokenization, it's a little bit more direct. So let me just explain. So let's have an example. So we have a developer, and then he has a site, he has a land, he wants to build a building, for instance, and he comes in to invite some investors to come in to invest together with him. So what actually will happen is that he's able to tokenize the land through obviously an SPV, and then offer those tokens to the investors. What the investors will receive will be digital tokens in their digital wallets. which legally binds the token holder to the underlying property. So in this instance, instantaneously, people that hold the tokens are now considered developers. So they earn the upside once the property is sold, right? And the developer will just, proceed on with the building of the property, getting all the various permits and all that, obviously for a fee. But the investors, all the token holders, will be able to participate directly in that deal. So by the way, this is an actual project that was tokenized sometime early last year. So we raised money, tokenized and raised money for this particular project. One detached house, which we are breaking up into 3 terraces. So this is the entire process that goes through. They demolish the building, they start on with piling, they put the pile caps on, they started going up, in terms of the number of levels. This, for instance, is a 5-story development. And, after the building is completed, this is just an illustration. The actual building will be completed in Q2 next year. So this is just an illustration of what the token holders are actually participating in. So this is a nice, beautiful 5-story terrace house. You can park 4 cars inside. So it's a very nice, luxurious development, basically. And then our token holders managed to come in to be part of that. So that was something that we actually put on the platform. So I'll let you admire some of the beautiful pictures of the development. So the whole idea is that once we have fully developed this and then we have sold it. By the way, we only have 2 of the units left. 1 has already been sold. So once all 3 have been sold, for instance, capital and returns will then be returned back to the token holders, and then the tokens will then be redeemed from the blockchain. So that is the general idea of how investors or even token holders can participate in a fractional deal like that. And the good thing about having tokenized forms of securities are that you transact with a platform. You do not transact with, if you go to you don't have to go to the lawyer's office, sign documents. You don't have to go talk to the fund manager to sign documents. So all those are taken out, and everything is in the digital tokenized form. So you may be thinking, oh, how about investing in overseas properties, for instance? Yes. Okay. So this is also a very interesting thing for most Singaporeans, and because Singapore's returns, in terms of real estate investing, are not as high. So sometimes when you invest overseas, you get slightly higher returns. This is why some people like to invest overseas. So for instance, in this example that I'm going to cover here, if you're looking for overseas investment properties, for example, it's often very difficult to look for all these investments, right? There are thousands or millions of properties overseas. How are you going to look which one to invest, and all that. So it's actually very difficult. So we usually rely on an asset manager to help us look for such overseas properties. And also because it's very difficult for us to manage, properties overseas. If you have a property, say in the UK, right, for you to get rental, for you to receive rental, for you to make repairs, you must rely on somebody over there. And it may be very difficult if you're over here in Singapore to manage something in the UK without a professional asset manager looking after that particular property for you. So we'll look at this particular example that we have here, which is say a $30 million GBP student accommodation fund, for instance. So this is something very similar that we have put on a platform, but not entirely accurate. It's just an example. So for this instance, the asset manager invites investors to come in to invest right in this building. So the same thing happens. He tokenizes the asset on the blockchain, and then he invites investors to come in to participate in the investment by buying the tokens. The token holders will then have a legal right over the distributions of the property. And this is done through a few layers of the SPVs that the asset manager usually sets up. So during the new school term, what happens? The students move into these student accommodations. They obviously have to pay rent, so they pay the asset manager rent, which then, the asset manager will make periodic distributions back to the token holders after deducting his fees, of course. So this is a very real estate, traditional real estate investment type of a model. So if you replicate this with an investment property in Singapore, investment property in New Zealand, for example, this is exactly how we envisage real estate tokenization to look like. And of course, when they sell the property at the end, the asset manager will come in to redeem all the tokens. You pay up the capital and the net proceeds from the sale back to the token holders. And then that's it, basically. So, and imagine doing all this from the comfort of your home using a web platform. Everything is digitized. The assets are tokenized. So that is, provides you the convenience of really investing online in a safe way. So that's the end of the presentation. Thank you for watching. If you have any queries regarding the presentation, feel free to reach out to me on the Exceptional Homes virtual event platform. Or alternatively, you can contact us through our website or emails as shown here, www.fraxter.com for the real estate tokenization and investment platform, www.fraxter.capital for developer property sales, if you're interested in some of the properties that you have seen, email and telephone number as shown.